Hey guys, Mike here. So obviously this week and next week are just absolutely crucial for the market, right? I mean, these earnings for these companies coming out, they're some of the biggest companies traded. And if they can at least beat earnings and then hold their guidance and not lower their guidance, we could absolutely see the market take off, especially the Nasdaq. I mean, that's just the way it is, whether you agree with that or not. I know the macro picture it's disastrous, honestly. Look at everything going on. But, we all know the market can be irrational for a long period of time. Doesn't matter. And, so I'm not going to be surprised either way. But we're going to go over some data I think is crucial. And I definitely want to get your input in the comments on this, of the conversations you're having and what you're doing, right? Because I can give you a picture of what these earnings are going to be like for these companies, okay? And I found some data that, I look at and I'm like, okay, maybe, I guess. We'll see what happens, And the other thing is, if you didn't notice yesterday, if you would have bought the Nasdaq or the QQQ ETF a year ago, you'd have been in the red, right? Because it went up and it gave back all those gains. So you can get it for the same price yesterday as you could have got it for a year ago. And so I was wondering what happens, how many times that happened since 2000? What happens after that? And how does the market react? And I found something pretty interesting, I think. It's funny because it just happened today to kind of seal the deal on that, what I found and stuff. So if you're getting out of it, hit the like and subscribe button, and let's get right into this. And so looking at what I was talking about, this is the Nasdaq 100. I pulled it for you. And you can see right here, 365 days, what happens? We're in the red. The funny thing is, and you'll see this multiple times, is what happens on the last day, on the 365th day, is it usually pops up to try to get us back in the green. And so I found that funny because that's what happened today. And then we go to 2015, and it doesn't just have to be a year sell-off. I mean, when you pick one of these peaks, what normally happens is we're going on a nice run up for maybe a year and a half and stuff. And then that's when you get this sideways movement. But you can see right here, it wasn't just a year, it was like 430 days right there, where it ended up down from where you actually would have bought it before that. And you can see the volatility is just huge, but there's no crashes. None of those are 20% move downs at all. And you can see after this what happens. I mean, it goes on a 43% run over the next year. And so, that's normally what happens. You'll see this in the other ones. After you see these sideways movement for a long period of time. You go 2012, same thing. We end up getting to 364 days right here. And we're in the negative, and then boom, on the 364th and 5th day, what happens? The stock market moves up to try to move us back in the green, which I find to be funny. It happened multiple times. And then, of course, after that, what happens? You end up getting a nice run up after this. And then we go back to 2010, and this one right here is another one where it moves sideways because we're coming out of a run-up after the '08 crash and stuff. And you get that 364th day, and of course what happens? It's flat or red, and then boom, pops up, right? Just like it did today, pops up, and then from there, you end up getting a very nice run once again. And then, we go back to the last one, which is '04, right? So we're getting this huge run up coming out of the dot-com bubble crash. And then this one, though, wow, you think it'll go for a year? No. This is how long the market can trade sideways, guys. This one went on for 951 days. Okay, that is a long time. So well over 2 years there. And so, that right there is what we hope we're not in or going to see for a long time. But after that, of course, you get a nice run up around 49% over about a 1.5-year time frame. And so I just found that interesting. You can take a couple things from that, right? Obviously, the market can sell off sideways and be extremely volatile for a long time, well over a year if it needs to be, right? The other thing you take from that is what happens. If you're still in there, that's why I say don't try to time the market. You get these huge runs because if you see an index go up 48, 50%, the stocks are up way more than that. And so over that same time period. And so, you take two different things in that, but I just find it funny. We're getting this huge run up today, which will put us back in the positive for a 365-day period there. And you see that multiple times happen there as well. And so, the other thing, and really the big thing we can watch out for coming into this earnings over the next 14 days is going to be consumer spending, the consumer, right? Because we are a services-based economy. We don't make that much anymore. Okay, we get everything from China. And so, you look at, and this is where I say you come in at, right? So where I come in at, what conversations are you having around the dinner table with your friends and your family, around the water cooler, at work, in the elevator, right? In my bubble, it's the same conversation I'm talking about with, like when I went to get my physical last week, talked to my doctor, and what did he say? He's got 2 older cars, just holding on to them. They don't work anymore, and they don't go out to eat as much anymore. And they sure don't buy as much. If they don't need it, they don't buy it, right? And that's an MD. Talk to our pediatrician, right? Owned by a married couple. Both are doctors. Both make good money. Same conversation. They're like, nope, we don't go out as much anymore to eat. We've switched to non-name brand stuff now. Same thing my wife and I have done. We're grocery shopping. We just don't do it. We're going to go out more and try to go on some vacations. Yep, that's one thing we're going to spend some more on. Absolutely. But we're looking at how much our homeowners insurance is going up. Our car insurance is going up. We're just looking at how much things cost. And, the question is, according to the banks, the consumer's in a much better place because they have more savings now because of all the stimulus checks and things like that. But the other thing you got to think about is how long is that money going to last? That's the big thing. And are people actually spending, as much online, especially, right? That's really the big thing. Is that going down? Are you spending as much online as you used to? Because I know we don't. Are you spending more out in the stores, like the Walmarts and the Targets and stuff like that, right? The dollar stores, that kind of stuff. Where's your spending at? And you can kind of get a very good idea of where these companies are going, or with their earnings calls because of what you got going on in your bubble, right? Some people tell you they just do the same they've been doing. I've always made the argument, I don't see how e-commerce spending can possibly be as high as it was in 2021 and 2020 for that matter, right? Because everybody's out. Everybody wants to get out now. Everybody is out. We just lifted mask mandates and stuff for a lot of places. So, we are open for business, right? The whole world is open for business. And so, hit me up in the comments of what y'all's conversation is with you and your friend, your family, and everybody around you. But, you can see right here, consumer spending right here going into this year, obviously it continues to increase as a whole. And then when you look at, personal consumption, you can see disposable income increase, right, going through 2021 because of all the stimulus that was out there. You see the savings rate, as soon as we opened up, obviously fell off a cliff. But people saved a ton during this time period because there literally was hardly anywhere to spend unless you were spending online. But you can see it fell off a cliff, took a nice little bump up there last month. And, you look at where everybody's at. This is what's crazy to me. This is the bills we have as people, right? Just 4 sections here make up 75% of our spending. Okay, 30% goes to housing, 16% goes to transportation, food makes up about 13%, and then personal insurance, pensions, that kind of stuff, around 12%, right? And so you just look at that right there. That is amazing. And the rest of the 25% of the pie is divided up into savings, healthcare, and the stuff you can see at the bottom right there. And so the big question is, when you look at that, and you look at the reports coming out saying, spending is either up or down. But when you think about it, with the increase in prices, you would think spending would be way up, right? Because it's not even accounting for inflation. Okay, that's what Kathy Wood says multiple times, where she says, yeah, you see it's up, but actually it's not, because stuff is just so much more expensive than it was a year ago. Okay, and maybe in your area it's not, but that's what you got to ask yourself. Are you buying more things? Or are you buying less things right now? Are you cutting back? Are you saying the heck with it and you're digging into the savings account? Or maybe you got a big raise at work and you're making more money and you're putting that out there? Because right now, you got Amazon them. You see Amazon, what they just do? Pass on a 5% like inflation fee or something to the people selling on their site. So what is that going to do to us? They're going to raise their prices. Those people are obviously going to raise their prices to offset that 5% increase. And here comes another price increase, right, that we're getting just now. And so, are you buying as much online? That's the question. Are you buying as much off Shopify or Amazon or any of those e-commerce sites? And that's what you got to ask yourself, right? We're not. Maybe you are. And in certain areas, rents aren't going up nowhere near as much, or real estate ain't going up anywhere near as much. The bigger question of all that's happening, are you really getting raises at your job to offset those increased expenditures if you have some? And so and you'll have a pretty good idea of what these earnings are going to turn out to be. You going out there and trying to buy a car right now, or are you trying to hold off? That's the stuff you got to ask yourself. And the biggest thing I'm really curious to see this earnings season is the e-commerce, right? Because the data I see right here, and when you look right here, this is the latest data I could find on retail sales as a whole, and then compare that to e-commerce. And I mean, I'm no mathematician. I know e-commerce obviously is going to continue to go up, but when you compare it to total sales out there, 13.6 is greater than 12.9, which is the latest number recorded, or 12.9 is less than 13.6, which was reported fourth quarter of 2020. And so it seems to me more people are going out and actually buying stuff. And of course, I could be reading that report wrong, but you know, yes, is e-commerce going to continue to go up? Absolutely, it's going to continue to go up. But right now, as a total of all sales out there, it seems like more people are going out in the stores, right? And that's why you see those stocks actually going up, right? Pretty significantly actually over the last couple months. And I think as we continue to, more people feel more and more comfortable going out and doing their thing, and you start having more people go on vacation and all this stuff, then yes, we're gonna have to see where those numbers go. But the question is, you know, for Amazon, Shopify, all the payment companies, processing companies that, you know, process these payments for these companies, you know, how is that going to affect their stock? Are they going to actually meet expectations, or are going to end up missing revenue or guidance, or be able, or have to, you know, lower their guidance? That's the big thing. And so, you know, for those who don't know, I just saw them recording this. One of the FANG stocks just reported, Netflix, and they took a big dump, and they are down 23% right now after hours. So, whew, yeah. I don't think you can make that out. But when you see that line right there dropping off like a cliff, obviously same thing that happened last quarter, if I'm not mistaken. You know, that's a big stock, makes up a big weight in the index. So that's not good. So one down, about what, 6 or 7 more to really think about here. We got Tesla coming up tomorrow, which I mean, I think I assume they'll beat earnings. We'll have to see. But obviously, you know, the effects of their Shanghai plant being shut down for 3.5 weeks or whatever it was, they're not going to feel that on the first quarter, but it's going to be interesting to see how the guidance goes on that as well. And plus with China, I mean, Lord have mercy. It's a whole bunch of macro issues going on over there. And, you know, so we'll see how that's going to affect their car sales and stuff. So, you know, but Tesla's one of those stocks, they can rally the market. So we're going to see what happens tomorrow, you know, and all these FANG stocks can rally the market. So we're just going to see how it works out. I'm interested to see how it works out. And let me know what you're doing, stuff like that. I kind of made my plans known last week, what I was trying to do with some of these stocks, doing these stock splits. You know, but I'm not going to be a hero. I'm not trying to jump in front of a bus, basically, right? I don't mind letting them report earnings and let me hear in the guidance, you know, for 2022 to see what they see and everything, okay? And so that's where I'm at on it. You know, let me know what you guys are doing. Hopefully you got something out of this, and I will see you tomorrow.